Hey guys, Peter here. Welcome to the video. Before I get into the content, I just wanted to give you guys a really quick reminder. The Jim Dalton Mind Over Markets Expanded first course is going to start later in February, and the special Valentine's Day discount is only available for about another 4 days, and it does end on Wednesday at midnight. So again, that's Wednesday midnight. The coupon codes are right here at ShadowTrader.net. And when you get there, just click on Premium Services, and you can find all of the Mind Over Market stuff right here. All right, let's get into the video. Good evening. Welcome to the Shadow Trader Video Weekly for Sunday, February 11th, 2018. Title of this video is Where Are We Now? And after such a rout in the markets, that's obviously the question we should be asking ourselves. I want to start with some little daily here on the S&P, but I really want to push more focus on the weekly and the monthly to show everybody the dichotomy between where we are currently in terms of overbought, oversold, and how that looks on the larger time frames, where to me it still appears that we're still overbought and there could be more correction coming. That being said, the move from high to low was from the exact high to the exact top was exactly 11.8%. And that is pretty huge, obviously. And we have seen corrections in the past over the last couple of years where we see roughly between 9 and 11%, and it just happens, boom, within the course of a week, sometimes as quickly as just a few days, and then it rebounds back. So we'll see if that's the thing now. But what I wanted to point out is why I think that this time may be different, as a lot of people in the markets often say, is if you switch the chart like out to a weekly, for instance, and make it a little bit smaller, right? You can see obviously we're at this weekly support, but then when you switch out to a monthly, you can see that the actual monthly support in the markets is way out here. In the S&P is really around 2100, and this is the actual dominant trend that's been happening since the beginning of 2009. This essentially is the rally. The rally started in 2009 in March when the S&P hit 666 and change, and you have these two anchor points here, and we just rallied here, and you can see here this is the open space that still exists in between where we are now and where the actual trend line support is. So I think it's very, very important to keep an eye on these monthly charts. Now, if my assessment is correct and the market will want to move lower over time, I would say that an important point to note would be that when a market switches from uptrend to downtrend, it will start immediately having downtrend lines, right? I mean, we only know basically in this market lines that look like this, right? We just keep going like this. We keep starting in the bottom left and drawing to the upper right. But if a market is going to switch directions, then obviously you have to start being able to draw lines this way. So keeping it simple usually is the best thing to do in the markets. And in keeping it simple, I've annotated right here that the first trend line would be here from the highs, and then the first touch here. And then notice that that leaves this open space here. And this open space is very, very important because markets that are very oversold in the short term and have huge volatility, remember, they can do what traders like to refer to as rip your face off rallies all the time. And these rip your face off rallies often fool people into thinking, oh, now the tone has switched back to bullish. But what's really just happened is that volatility has increased, and volatility cuts both ways. In the same way that markets panic sell on the downside, markets panic short cover on the upside. So keep that in mind. So this area here in the chart is going to be very, very important. And I like the fact that it comes right to a nice round number around 2,700. So this is where my focus is going to be in the coming weeks throughout February, is to see what the market can do within this area as it's in this box and possibly move lower. Moving up would be fine, and I think that this area would be worth it for a reshort. That would make sense. That would be probably the easiest play because you're right or right out. You know what would happen if you're wrong. The market will just have a close above that line, and then you'd be wrong. Okay. Let's take a quick look at market profile. I don't have too much to point out on the profile. I've purposely put the screen this way. I've already expanded it out just to show you the taper, and that's really what I wanted to focus on. 5 contracts traded at the lows on Friday, and notice that the low volume went all the way to here. Then there was just one little instance of high volume, and if you keep going, it really just keeps on going, and right up in here all the way up at 25.50 is really where you started to see 10,000 contracts or more like this. But this entire thing was a taper. So that tells you that, as usual, futures traders, they kind of get busy at the wrong times. There's not that many of them at the low. I think this is more of a short-term signal, and I'm carrying it forward. And it's more of a signal along the lines of what I said earlier in the video, where I said, look, this is how traders act, especially momentum traders. They overdo it on the lows and they overdo it on the highs. So don't confuse that this taper is a longer term signal. Remember, the taper is more of a day trading signal when you're looking for what is the low of the day. I try to point this out as much as I can on Twitter. Whenever I see these very, very low contracts change at the lows, I'll send out a tweet on my regular Twitter feed that's public, and I'll say, hey, 37 contracts just traded at the lows, and I'll do a picture of the taper. And 9 times out of 10, it's the low of the day. Sometimes it's the high of the day where you see the taper on the other end. So very, very important to carry forward. We did have a good taper on Friday, but again, could be much more of just a short-term signal. Let's look at some stocks here. Just a couple of issues. I just want to point out a couple of strong issues that I'm seeing. And again, I want to point out that divergence between what's happening in the shorter time frames and in the longer time frames. So as I was going through my IBD 50 list, I noticed that ISRG was showing quite a decent amount of relative strength and also had some support coming up. Now, this is a support that I would probably play. It's 100% retracement of the last move. And whenever you have a 100% retracement, see how these two lines are equal length, and this move up are equal. Whenever you have that, it's very high odds that you get a bounce at the 100% retracement, because it's very, very hard for stocks to retrace 100% and then keep going. Usually what will happen, you'll come in like this. And a lot of people make the mistake of shorting this area, and it's always a very bad mistake. It usually goes higher. So ISRG, for instance, was something that gave me a long signal, or at least is setting up for a long signal somewhere in this 360 area. But what I wanted to point out is if you go out further to the weekly, on the weekly it's much clearer that it could fall much further into this area. And if you look on the monthly, it's still extremely overbought, right? Look at your trend line in terms of the uptrend is really here. Maybe there's a secondary here, correct? And then your tertiary, right, the steepest, when it really took off, it's still very, very steep. And I don't know what the odds are that we have this sort of candles lining up same size bodies where the next month is going to be up in ISRG. Certainly it can, anything can happen, but I think once this has already happened like 2 times in the past, where the monthly candles have sort of lined up and been adjacent to each other and kind of denying each other. I don't know if that's going to keep happening. So that's one perfect example there. Another one that I found was ALGN, which is I believe it's called Align Technologies, and it's the same thing. If you look on the monthlies, you've got this big open space where you could retrace to, right? Certainly when you have the red, green, you always want to defer to the outside candle. The newest candle is the one that you have to assume is going to be the next direction. But again, when you look at the daily, same thing. 100% retracement is pretty much almost already happening here, and I'd probably do a short-term buy at 210. But I have to keep in mind that bounce may be very, very short-lived, so we shall see. All right. So that pretty much in a nutshell describes exactly where I think we are. I think the odds are pretty strong that we can go lower. We're going to be within the context of a lot of short covering, so the market could be very, very crazy here. And again, I just want to reiterate, I think your best bet is to understand that within this area here, the market could be very wild. It could just move definitively lower very quickly, but it also could have a lot of short covering craziness here. And probably one of the higher odds plays going forward is to use this S&P 2700 as a reference point, and you'd want to be selling calls against, for instance, if you're an options trader, up against this 2700 level, and then putting on some sort of complex spread within here that's going to benefit from the higher volatility, where you're going to be getting, for instance, large butterflies very cheap and maybe finance them by selling some sort of complex spread or even just a vertical way up there on the call side. So that's for instance, a strategy that we're employing right now in my weekly options advisory. We're looking at, we actually have a butterfly on around the 2600 level, and we're using a complicated call spread on the upside to finance it. So I think that generally is something that works very well in a higher volatility environment. That's where we are right now. All right. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.